A MIC, or a Mortgage Investment Corporation, is an investment vehicle created under Section 130.1 of the Income Tax Act, which allows us in Canada as a fund manager to create a vehicle that pools investor capital, layer on a little bit of bank leverage at the fund manager's discretion, and then lend that out into a diversified basket of Canadian residential mortgages. We then, every month, take the net mortgage interest income that is collected and the fees that we collect, and we distribute in dividends to all of our lovely investors. First Place invests exclusively in first position or senior secured Canadian residential mortgage assets. We invest in primarily single family homes, and that can be condos, apartments, townhouse, or single detached residences. We like to keep it simple. Again, that is built single family Canadian residential mortgages. We're helping a Canadian either buy or invest into a property where they've got about 30 to 50% equity in. So our leverage, or loan to value, as we call it, LTV, is 50 to 70% typically in First Place. And on average for the portfolio, we've got a weighted average loan to value of 58% at origination. So First Place, as mentioned, is focused on the Canadian residential mortgage market. We like major urban centers, Greater Toronto area, Greater Vancouver area, Calgary, and Edmonton. When we have to sell a property, we have a very liquid, wide market, and that allows us to obviously keep funds flowing through the MIC and distribute proceeds out to our investors. Our typical loan to a borrower is 12 months. At any given point in time, though, for our portfolio, there's just shy of 6 months remaining term to maturity on any of those mortgages, which means we can roll over our portfolio pretty quickly, and that's what allows us to have that liquidity to pay out distributions on a monthly basis per policy to investors. And then if somebody wants to redeem their funds, we have access to a revolving door of funds that can be paid out. We need to be prepared that prices can move. The beauty of Canadian residential real estate is that it is a pretty attractive asset. If we are prepared at any given time for a 15 or 20% correction in the market, we're adjusting or sensitizing our expectations and our forecasts for what the portfolio is worth and how much equity we have in our properties. We had 0 loan losses in fiscal 2023, and year to date in fiscal 24, we also have $0 of principal loan losses on the book. At the end of the day, our goal is to focus on stable returns, consistent returns. We keep it simple. Definitely not. No, we're keeping it simple. We're keeping focused on residential lending. We're not chasing that shiny object of trying to get higher returns or lending to less liquid assets like commercial or development projects. We're certainly expecting that MICs are going to be a more popular option for borrowers going forward. We've seen credit qualifications tighten up ever since B20 rules about 6 years ago, and that means that there's qualification rates for borrowers at the big banks where their contractual mortgage rate you've got to add 2% on and sensitize to see if you can make your payments. B20 rules have really helped out the private lending space become a more viable option, a popular option for borrowers in Canada. We hope that rates continue to drop so that life is easier for the average Canadian, but we are certainly still expecting there's some sticky inflation that's really tightening up people's wallets and their ability to make payments. So when you go to a major bank to try to qualify for a mortgage and the qualification rates are steep and there's new debt to income ratios that we expect will be rolled out to the banks, further impacting the bank's ability to provide mortgage financing. The Canadian consumer has to turn somewhere, and we are very happy to help them out. It's been a choppy 4 years. We've seen a pandemic, we've seen interest rate hikes, we've seen very high inflation, and we are very excited to see some stability going forward in line with the stability that we continue to focus on providing for our investors.